Hey guys, hope you had a great weekend. This is Taylor from thetradinganalyst.com. Thank you for stopping by. The video that I'm going to be making for you right now is going to be on how you can find big winners before they happen. It's really simple. Keep it very, very simple. So there's three main principles here that we want to focus on. The first one is you want at least 2 weeks of sideways trading. And just to kind of say something really quick, I am going to be covering specific stocks and going over their charts. So don't worry if this doesn't quite make sense just reading this text, because I am going to go over it thoroughly looking at the charts. Okay, so 2 weeks at least of sideways trading. Within those 2 weeks or more, 2 or more weeks, multiple days of heavy volume, okay? Not just a little bit above average volume, but way above average volume, multiple days, okay? Then the entry is a move outside of that sideways trading range, all right? And now some things to remember here. And again, I am going to be discussing all of these things on the chart, okay? So common misconception that a red day, a day where the stock headed lower with heavy volume, automatically means that it's bearish, okay? It can mean that, of course, but it doesn't automatically mean that. And what I mean by that is if price moves above that red volume day, maybe it wasn't bearish, so bearish after all, okay? And you need to let price be your guide. And as far as the sideways trading is concerned, don't get too caught up in the details of the sideways trading. All that really matters is that it's not trending. It's a tighter range than normal. And it's not trending, and you'll be able to see that on the chart. Okay, so let's take a look at the first chart. Okay, so this first one we're going to take a look at is Shopify, and this is one that has already kind of moved quite a bit out of its range. I am going to be discussing 2 other charts where the stocks have not quite moved as far. So if you want to take a look at them and you like them, that'd be great as well. But I want to show you what it can do, and that's why I'm showing you this Shopify, to showing you that this stuff actually works. Okay, this is Shopify. We've been long this stock for a few weeks now, for myself and my personal account, as well as for the clients that I manage money for. So here's Shopify. First and foremost, you have this sideways trading. Okay, again, don't get too caught up in the details of the sideways trading. You know, someone might think, oh, well, going from 280 to 340 on this stock is like a 10% move, and that's not considered sideways trading. Well, they would have a point, but the point is that you go back and forth between a range. Okay, it doesn't matter if that range is a 30% range or a 50% range. It doesn't matter. The point here is that we're bouncing back and forth, getting rejected at resistance, bouncing at support, going back and forth, and for the most part, a lot of sideways trading in this range. Again, don't get too caught up in the details of this. Okay, so that's the first requirement. The next requirement is multiple heavy volume days. And as you can see, Shopify definitely fit that bill. And again here, remember, for example, here are these days in the range. This is a red day. We had a little bit lower after that. So remember that just because there's a red day doesn't mean that it's bearish, okay? Because notice how there was this big red day, red volume right here, huge volume. But we didn't really go that much lower. We went lower for a few days, but then we bounced. And the other thing too is notice on this day right here, this big red day, huge volume, and notice what do we do after that? It marked the bottom. So maybe it wasn't so bearish after all. especially because the very next day right here was a big green day with huge volume. Okay, these are your first couple of hints. Boom, boom, right here, and then price moves a little bit higher. Okay, so we go a little bit lower right here, and another big volume day right here. This was actually a red day. Don't let that, that's why the volume is red. We actually closed below where we did the previous day. But notice, huge volume, and we just went a little bit lower and then bounced from there. Okay, so that's why I discussed the bullish versus bearish volume. You don't really want to get too caught up in that, because if we move higher, then maybe there was actually a lot of buyers, okay? And it doesn't necessarily, remember, there was huge volume down here, and notice how we went higher, and then we went lower again. It doesn't always just catapult straight higher like a V-bottom. Sometimes we need to trade sideways. And it's actually better that way when you trade sideways, because the reason we use this sideways trading is because when you have sideways trading, it builds up energy, okay? For example, I just want to show you, Shopify on the longer term chart. We're going to look at the last, couple years on Shopify. You see it was on this huge run right here since December 2018. Huge run. And right here, we just needed to rest, okay? We just needed to rest. And when you rest, you build up energy. It's the same thing for exercising or reading or anything like that. When you give yourself or the stock some rest, it gives you energy for the next move that you're going to make. Okay, and that's exactly what we did for Shopify. So we're trading in this tight range, checking that box. We have multiple days of heavy volume, check that box. The third box that we want to check is, did it move outside of the range? And it checked that box right here on this day right here. Okay? What's beautiful, and this is not necessarily a requirement, but it does add to the success if you break out of the range with a heavy volume day as well. And we did that with Shopify. This day was actually one of the biggest volume days compared to all these days. All these days that we saw, very big volume, but this day was even bigger, and that's gorgeous because that was the day that we actually moved outside of the range, okay? The other thing too that I love is that, and you'll see a similarity on another stock I'm going to cover here, but is that this day right here, before the breakout day, headed lower and then bounced huge. You can see that bottom tail right there. And that day was also a pretty big volume day right here. You notice that is definitely above the average. The average is about, 2 million or less. Notice, most days here are less than 2 million. This day was, like 3.5 million, something like that. Yeah, 3.2 million shares traded that day. Followed by the next day, right here, 5.6 million shares as we break out of that range. Okay, that's the entry signal. As you can see, it's been going higher since. It's like a 10% gain already, something like that. So that's that for Shopify. Tight range, volume, breaking out of that range, and that's the long signals of breaking out of that range. And it's a bonus here that the breaking out day was on heavy volume as well. Okay, so that's Shopify. So the next one we're going to look at is X. And this is one that has kind of moved a little bit out of this range already. The last one I'm going to show you, this next one I'm going to show you, is one that I think is still a good entry point at this current point. But let's discuss X right here. So X. Trading sideways right here. Boom, boom, sideways. And look at this. Just in a few weeks, we had all of these massive big volume days. Remember, this is a big gap down. Green, or it's not really green. It's a red day because we gapped down huge with this red volume. But notice we didn't really go lower after that. Okay, barely broke that low. and essentially just traded sideways. Okay, same thing here. Oh, here was another big volume day. Boom, right there. Here's another one. This big red day, notice it broke those lows, big red volume, but what did we do after that? We traded sideways the next day with another heavy volume day, and then boom, this huge green day right after that. So maybe this red day wasn't so bearish after all. Okay, same thing over here. Boom, big red day and red volume. Next day, a green day, sideways trading with some heavy volume. And what did we do after that? We traded higher, higher, and then we broke out of that range right here. So to me, that was the long signal down here at about 12:25 on this day. And as you can see, has headed much higher since then. All right. So that is X. And X, I think, is going to be a big winner here. Yes, we have moved outside of this range, but I think X, United States Steel Corporation, is still in the very, very beginning stages of this move. Notice here, there's more sideways trading right here. It's just digesting this move here and building up energy for that next move higher. All right, so that's X. The last one we're going to cover here is blue, and this is really, really good one. Okay, so as you can see, blue has been trending down for a while. But notice here what it did down here. All right, sideways trading. Oops, I'm just going to redo everything here. There, and then there. Okay, so we came down here, sideways trading. Okay, and notice here, you need to have heavy volume. Okay, you can't just do sideways trading. For example, here, sideways trading. Okay, and then we headed lower. Here, sideways trading. And then we headed lower. Okay, you need all three things. Okay, I'm going to move my face so you can see it better. So for example, yes, we had sideways trading here, but what did we not have? Heavy volume. We had some heavier volume here and here, but you want to see, notice the difference between these volume, little volume upticks and this. Okay, this is like 3 times the average volume. Okay, so yeah, you need to have not only sideways trading, but heavy volume, and you also need to have a breakout of that range. We didn't get heavy volume, okay, and when I say heavy volume, I mean massive volume, and we didn't get a break out of that range, not to the upside at least. Same thing over here. Okay, we got to break out of this range to the downside with heavy volume, and as you can see, it moved lower. Okay, more sideways trading here. Okay, so you're getting the point. All right, you're getting the point. So what we have here is sideways trading with a big uptick in volume. Okay, here on this day, right here on this day, multiple days right here. Notice how it's heavy volume, but it's not really going anywhere. Okay, that's because the big boys are loading their shares. Okay, and they're just eating up all the sellers. Okay, they're not necessarily pushing it higher, but they are eating up all of the sellers. Okay, and they're loading and they're loading and they're loading. Finally, we get a break out of that range right here. Okay, and this is on decent volume. Okay, that was like your first signal. Then we kind of traded sideways here, and this is what I love about this move here. And I'm going to just zoom in a little bit so you can really get this picture. Okay, so here's this range. Broke out of that range right there. Then right here, this is what I love about this setup, is this big red day, big red volume. Okay, you might think, oh, maybe I was wrong about this range. Okay, headed lower, massive volume. What do we do the next day? Huge bullish engulfing candle, also on heavy volume, closing over not only the previous day's high, but the highs of these few days right here. Okay, that was the day that I personally got long right here for myself and clients. Okay, so it had its chance to break down. Heavy volume. This is the heaviest volume day and then the next day it just catapulted higher. Okay, that was the long signal for me personally, and as you can see, very nice action. And then also, just to kind of take it a step further, the very next day we headed higher, but we did have a little bit of a topping tail, and then the next day was red as well. So you're thinking, oh, okay, maybe we're getting faked out again, just like we did over here. But the very next day was a gap up and a close over the previous day's high with, again, heavy volume. Look at this volume. Okay, compared to these days, it's not as big, but if you look at this volume compared to any other day, going back here, like for example, this day over here, 600,000 shares traded. Okay, whereas this day right here, over 2 million shares traded. So about 4 times the normal volume that we saw on this day. Massive volume. Okay. So again, sideways trading. Let me go over it again on the document. So this is how you find big winners before they happen. And again, Shopify is still just getting started. X still just getting started. Blue is still just barely getting started right now. And I think these guys are going to head much higher, and they can get really explosive. So how do you find big winners before they happen? Let's review. At least 2 weeks of sideways trading. Remember, do not get too bogged down on the details of this sideways trading. Again, it's just a range. It doesn't mean that the stock is completely flat for 2+ weeks. It just means that it's in a range, okay? And it's not trending up or down. It's just bouncing back and forth between a range, okay? Then you need multiple days of, I should really change this to massive volume, not just heavy volume, but massive volume. And then the last box that you need to check is a move outside of that sideways trading range, okay? Because what can happen is it can sometimes it can actually break to the downside, all right, out of that range. And maybe a lot of people were selling instead of buying. But the way that you know that more people were buying and that it's bullish is when you finally see price move outside of that range. That is your hint, okay? Because when it's trading sideways, you don't necessarily know. All right, guys? Now, I want to thank you for stopping by and watching this video. I really hope that it helps you out and that you're able to, in turn, put some money in your pocket because of this strategy that I've shared with you today. Now, if you don't already know, I have a trading alert service here where I share real-time alerts for all of the entries and exits for swing trade alerts, mostly options, but we do some stocks as well, all right? And as you can see, these are the results of the alerts for the past almost 2 years, about 18 months we've been using this portfolio tracker. I'm just showing you one portion of it because we do have a list of our open positions on a different part of this section that I'm not showing you, and that would be unfair to my current subscribers if I were to share that with you. So as you can see, the average win here is about 50% gain. The average loss is about 33%, right? And you can see the average win in a dollar amount is more than double the average loss in the dollar amount column right here. And that is because we also not only just give you an exact buy price, but recommend a position size as well. Not all of our trades are the exact same position size. On some of our higher confidence trades, we're doing 2 to 3 times the normal position size. On some of our lesser confidence trades, we're pulling back and we're not risking as much money. It doesn't mean that our lower risk trades are all losers or anything like that. It just means that we're not willing to put as much at risk. And as you can see, the total gains here in the last 18 months approximately, following all of the alerts that I've sent to subscribers here at thetradinganalyst.com, is $315,000. $315,000 following all the wins, the losses, the break-even trades. Everything gets factored here in this profitability. This is not a total account value. These are actual profits. All right. The average length of trade in days is about 9 days. So that means that on average, the trades that I alert to subscribers last about 9 days, which is perfect if you have a full-time job, you're a student, you're a stay-at-home mom or dad, or for anyone else that lives a normal life where you've got a lot of other things going on. This is not a day trading room. And most importantly, these are profitable trading alerts that anyone can participate in. So I'd like to invite you to join here at thetradinganalyst.com, and I'll start sending you these alerts right away. And these alerts, by the way, are done via text message. So as long as you have your cell phone, you're going to be able to participate and make money in the market. So I'd like to invite you to join right now. As soon as you sign up, I'll start sending you alerts right away. I look forward to seeing you in there, and I'll see you guys next time.